in for all these life insurance companies, and hence these counters are in focus as the IRDAI has asked the insurance companies to offer a surrender value from the first year itself, a move that could impact their margins. But the regulator issued a master circular which mandates insurers to pay special surrender value after the first policy year, provided one full year's premium has been received. Let's get in more details on this one. What does it mean for all the life insurance companies, and is the overhang over? Because since surrender value, the topic has been in focus for quite some time now. Anurag Shah is joining us to give us more details.
In Master Circular of Life Insurance, IRDA mentions about change in special surrender value for life insurance policy, and special surrender value cannot be less than present paid up sum assured and paid up future benefit. So while calculating special surrender value, the benchmark interest rate would not be more than 10-year GSEC bond yield with a cushion of 50 basis point. That leeway has been given by the regulator IRDA. Remember, in December 2023, IRDA came up with a draft notification to increase the surrender value, overall surrender value, which proposed to double the surrender value, but that has seen resistance from life insurers, and we have seen in final notification of March 2024, there was not much of a change in surrender value rules. It was linked with the duration of policy, but now the master circular clearly mentions about the increase in special surrender value that will impact life insurers negatively, because the life insurers margins will be impacted. Life insurance companies will end up paying more surrender value to policyholders, and IRDA has mentioned that new rules to be implemented by September 30th.
That's what the circular is highlighting, but let's also go across and listen into what the editor-in-chief of ET Now, Nikunj Dalmia, had to say about this circular and what he thinks would be the impact on life insurers.
The final implementation is actually exactly in line with what the draft circulation was. So there is no surprise in terms of the fine print. I also feel that the worst in terms of the regulatory overhang for the insurance, I think that is getting over. The insurance sector has not got anything very large, meaningful from a regulator standpoint. And post-COVID, at least the life insurance companies, they've really gone through a lot of painful grind. Meanwhile, there are a lot of companies which now are at the threshold of strong profitability. So I think that this is one sector which has been on a back burner for a variety of factors: post-COVID transition, regulatory overhang, the tax concessions were not extended. If you put all that across, I think insurance stocks have been underperformer. And when the typical when stocks, they start outperforming when there is end of bad news. And I think insurance sector is reaching that point where there is end of bad news. It's still a very complicated sector, and depending on your judgment, you cannot paint everything with the same brush. Life is separate and health is separate and general is separate. But I think from a comeback standpoint, if you're talking about private banks right now, I think it's a matter of maybe a quarter or so, everybody will start talking about private insurance companies coming back.
Well, that's the editor's take coming in on all these life insurance companies, and indeed what a great move in both of these stocks. So finally, what these brokerages are highlighting, though, that this could impact their margins in the near term, but overall this particular announcement is done now, because this has been an overhang for the life insurance companies for quite some time now. So final, this particular announcement that is coming in is indeed some respite, giving some respite to the investors out there, and hence a great move on HDFC Life in today's trading session, while SBI Life is quite silent as of now. But let's understand from our experts then how are they looking at this particular announcement, as well as on the technical front, which stocks are standing out where you can go ahead and bet on. With this, let me welcome on board Vivek Karwa of VRIDHI Investment, joining us on the fundamental side, as well as Kush Bohra is joining us to help us technically which stocks are giving breakouts or could be good bets for you. Very good morning to both of you. And Vivek, first up, wanted to have your take on the life insurance space with this new announcement. How do you see this impacting the companies, as well as any of your top recommendations at this point?
Okay, first of all, good morning to all of you. See, what is happening in life insurance is, say, a replica of what happened in mutual fund industry in last 10 years. So what is happening is, in mutual fund industry also, there were a lot of loopholes. The commission structures were high. There were many, many things. And today's date, as and when new rules were brought in, it has more transparency. The industry has grown. And what we used to feel 10 years back that this industry is not going to grow and we will have to change our profession, things have totally changed. Right. So similar thing is happening in life insurance. I think short term can be negative because the margin, in fact, the cost structure is almost double digit in most of the companies. But longer term, yeah, there can be stability and growth in this industry as well. At these valuations, I would not prefer going and buying life insurance companies as such, because I feel to some extent saturation has happened. And as and when the knowledge and the awareness increases, the companies will again continue doing well. So life insurance not very bullish, health insurance I am very bullish, and general insurance I am quite bullish. But life, you got to wait and watch. Things are not very clear. Okay, what kind of impact is going to actually come in. So things like stocks like SBI, LIC can find a little pressure in short term.
Okay, so life insurance is what Vivek is avoiding right now. Health insurance may be something that looks nice, but life insurance not something exciting. Kush, good morning, and what's your view on these insurance players, life insurance specifically? Are you also thinking that, life insurance has already seen a bit of a run-up kind of a situation and not much of an excitement there?
Hi, first of all, very good morning to you and to Vivek Karwa Jr. as well. He's literally sort of shaved off.
Yeah, absolutely. For 2 seconds, even I was like, okay, is this Vivek? I was like, this is a new look. So even I was like in shock for 2 seconds.
As I said, very good morning to Vivek Karwa Jr. as well, dialed back a few years and the same level of maturity. I mean, what more can you ask for?
Absolutely.
Right, on that note. Look, I have a very similar view as Vivek on the insurance space, and it's not been a wealth creator for the most part. It's a story where, you keep talking about the insurance penetration and the insurance awareness, going up. But if you see, for the most part, a lot of these stocks haven't really gone anywhere. And, the ones that have are perhaps a little overstretched right now. So it's, two ends of the spectrum, but it never really makes my list in terms of, going out and suggesting like a buy on a technical grounds, except for maybe a NAM, rather a Nippon Life, which recently made a very sharp move. But even there, we're starting to see some negative divergences today. So my suggestion, you could have something like an SBI Life and, a NAM India or a Nippon Life, on your radar. But other than that, there are far too many sectors that are doing well and, have a very clear run. And, the story is pretty much playing out there. You're saying playing out rather than perhaps, waiting for it to turn a corner. So while you could keep some of these names, as I said, like, SBI Life and Nippon Life on your radar, not a big fan of the entire space, in general.
If you like this video, then like, share and subscribe to ET Now.